Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, this is the daily video research from the ForexPeaceArmy.com. As usual, we will discuss the situation on the euro currency and we'll try to prepare some trading plan for the coming week. Well, this is the daily chart of the euro currency, and if you remember, during the previous week we said that when the market stands in the long-term bear trend, it's very common when it falls into retracement, it retraces to the weekly pivot resistance 1. So that has happened during this bearish trend. You can see market has closed above the weekly pivot point, that is blue dash line, and almost has reached the weekly pivot resistance 1, then continue to move to the downside. So something like that has happened during the previous week. We said that since market has hit the 100% extension targets around 132.42 from that pattern A, B, C top, 100% extension stands right here, it could show some retracement, and probably this retracement will reach at least this area of resistance, because you can see this is daily confluence resistance, Fibonacci confluence resistance 134.60, 134.67. Also, this is the weekly pivot resistance 1 for the previous week. Based on the current price action, you can see that although market has deeply pierced this level during the 3 days in a row, that was on Thursday, penetration closed below it. Sorry, it was in Wednesday, Thursday, and reaching of the December pivot point, monthly pivot points 135.09, retrace back close below it, and again. That is in general bearish sign, since market wasn't able to close above the weekly pivot resistance 1. When the market turns to some real reversal, it usually acts like here, okay? That is the breakout of the weekly pivot resistance 1 and acceleration right to the weekly pivot resistance 2 or even higher. So that hasn't happened. Also, the second important moment, that take a look at that bar on Friday. What do we see? Market has established the new high, taking highs of that bar and that bar, that is almost the highs of the previous week, and close below the previous low of the previous session. That is the bearish reversal candle. This is also the bearish signal. Also, the third moment is take a look how market acts based on the trend. The red line on the chart, this line, is the Jordan-Napoli oscillator predictor indicator. MACD predictor indicator. Well, it shows the trend. When the price action stands above the red line, the trend is bullish. It's right here. When the price stands below it, trend is bearish. But take a look at the current price action. Although it's not much time has spent after the penetration of the red line on the shifting trend to the bullish, the price action in general doesn't support the shifting of the trend, since market doesn't create the new highs, and this reversal candle shows the even opposite hint on the possible opposite move. So if market in the beginning of the week will start to form lower highs day by day, this and establish the new lows, and the market will just creep with this line to the downside. This will be the pattern that we call as bearish dynamic pressure. The minimum target of this potential pattern is the takeout of the previous lows and in general the continuation to the downward move according to our medium-term forecast. If you read our weekly research, you know that our medium-term target is around 128.50, 130 area. The long-term perspective is around 115, 116 area. So in general, based on our medium-term research, we expect the continuation to the downside. Well, formally and theoretically, there are some chances that market still could show some, for example, deeper ABCD pattern retracement right to the 3-8 resistance from the whole move to the downside. The next confluence resistance on the daily chart 136.05, 136.24. But daily chart doesn't show any signs of that currently. So maybe we will see something a bit later, but currently it also seems like market is really intends to continue move to the downside. Anyway, the price action during the coming week will let us to say it more definite. I think that at the end of the current week, then, depending on how market will act during the coming week on the intraday charts, will let us to make some conclusion about the further development. Will market will show some deeper retracement, or it will continue to move to the downside. But currently, again, there are more bearish signs than bullish signs of the potential continuation. Okay. Also, I would like to say that if even market will show the retracement right to the 3/8 resistance of the whole swing down, that is very common price action after the reaching of the 100% extension of any ABCD pattern. The 3/8 is absolutely normal retracement. This will not mean that market has broken our medium-term bearish perspective. This will be just, again, this will be still a retracement. Well, on the intraday chart, on the 4-hour time frame, what do we see? Well, in general, on the first view, all picture looks very bearish, because 4-hour time frame has turned bearish. We see a solid plunge to the downside due to the non-farm payrolls that has been released on Friday. Also, we can see that is wash and rinse of the previous highs of tops of the weeks, so market just clear out the stops just above these highs and plunge down, continue move to the downside. But as I said, theoretically, market has the chances to continue move to the upside, because if you will take a look at that pattern, A, B, C bottom, market has reached 100% extension, and now it is showing just the 618 retracement of the whole swing to the upside. That is very common. That 618 retracement is not some outstanding moment. This is very common price action after the hitting 100%. So if market will hold in the beginning of the week above that area, 133.40, 133.70, since 618 is a major fib support from that low to that high. This is another 618 support from that low to that high. Then we could count on some. Then the chances of reaching 1618 target and reaching of that daily complex resistance will be significantly higher. Well, from the another point of view, if we will see that market break that area, this will be the first signal that probably market is really showing the continuation to the downside. The second confirmation signal will be the erasing of that bar to the upside. That was due to the positive decision of the major central banks to provide the liquidity to the swap market. Okay, if market participants will erase this positive news and move below that low of this bar and take out this C point 132.60, this will mean that market participants returns to the assessment of the current European risks as they were prior this positive news. So market just erased this positive news and will not take it into consideration anymore. From the technical perspective, if market will take out the C point, it will mean that this ABCD pattern will has been erased, and this will be the major confirmation that market is ready to continue move to the downside. Well, again, two major points: this level of support and this C point of that ABCD pattern. If this level will hold, the market will move above the weekly pivot point 134.05 and continue move to the upside further. Then it will mean that probably market still could reach that area. If market will break it, this will be the first signal. The second signal is taken out of that low. So if you would like to get more confirmation and be more confident with the entering on the short side of the market, you probably should wait for the takeout of that low. After that, you should search for the potential sell signal on the intraday chart and enter on the short side of the market. Well, this is some kind of personal decision, since any of us has different risk sensitivity, different view on the market. Well, this is some kind that we call as personal issue, where to enter and what signals to take. Well, on the hourly time frame, we see our butterfly that we've discussed in the Friday video research, and I said that this is the minimum target around 135.50 area that market could reach, since this is rather significant, also because this is 127 extension target. Also, this 127 extension target from that ABCD pattern, you can see that market just hasn't hit it, just 5 pips. Okay, that was the first area where we should watch for the sell signals if you would like to enter the short side of the market. That we discussed on Friday. So you can see that market not only accomplished this butterfly, but it also has reached the target of this butterfly with the 1618 extension. It's 133.77 from that low to that high. Okay, market has hit 1618 extension. That is the target of this butterfly. Also, this target stands in agreement with this 618 support. Now you can see that market has turned to some retracement. Well, if you still would like to enter on the short side of the market, then you should watch for the couple of moments. First of all, your stop should be above that area, 134.78, since if market will erase this thrusting bar to the downside and also will re-enter in the area of the previous consolidation, this will mean two things. First of all, that this level still holds, and the second, that market returns back in the area of consolidation, that this was just the completion of the pattern, and the probability of continuation move to the upside will increase if market will take out that high. For bearish perspective, even more preferable if market will not break that area of conference resistance around 134.30, 134.40 area, because this you can see the low border of this consolidation. So if market will show some ABCD retracement to that area, that will be the area where watch for sell signals. But probably it's better to enter partially with a small lot from that area, since market has shown the aggressive plunge down. Market could show just shallow retracement and hit this trade resistance and continue move to the downside. And probably you could try to enter with a small part of your position from that area if market will show some continuation at larger part from that area. In that case, you will be ready for the continuation to the downside. The stop loss will be just about the 40 pips. It's not very much. Okay, risk reward ratio will be solid. Then when you will enter, you should track, as I said, keep an eye on the two situations. First of all, breakout of that high. In this case, this probably tells us that your position was wrong, and probably market will continue move to the 136 area. If market will break that lows, well, in this case you could not lose this FIB support levels. In this case you will be able to move your stop to the break even, and watch how market will respond with this still rest of the gap below the C point and taking of C point. If market will erase totally this bar, this will be nice confirmation of the possible continuation to the downside, and in this case I suppose that we could hold bearish position. At least market will take these lows, and market really could continue even to the 130 area. So that's a bit extended our view on the current situation on the market, because situation is not very simple to analyze on the intraday charts. So I wish you luck. Good luck to you, and control your risk and wait for the clear patterns before entering trade. Keep an eye on the levels that we have just discussed.